When you picture the global financial system, you probably imagine this massive dashboard with just millions of data points.
We're blinking lights everywhere.
Exactly. But if you trace all those lights back to their source right now, they basically plug into just one highly fragile wire. Welcome to today's deep dive. We're looking at the Capital Compass Morning Note from June 2nd, 2026.
Yeah, and the author manages to boil thousands of metrics down to just a single sentence, which is, the Iran ceasefire is alive but fragile.
Washington and Tehran are exchanging proposals, and markets are just holding their breath.
They really are. I mean, a single geopolitical negotiation is dictating price moves across almost every asset class. It's essentially paralyzing the usual mechanics of the market.
Which is wild. And to see how a political negotiation actually breaks the rules of global finance overnight, we just have to look at WTI crude oil.
Oh, the oil swings have been incredible to watch.
Yeah, they really have. I mean, oil dropped, 17% in May on ceasefire optimism? But then it just surged 7% in a single day, hitting like $92.21 a barrel, just on fears that the talks might break down.
It's not a market reacting to supply and demand anymore. It behaves more like a light switch, honestly.
Completely on or completely off based on the latest rumor. So, I mean, if the fundamentals are totally out the window, how do analysts even track this?
Well, they don't. The report actually calls this a binary event-driven market. Trend tools and algorithms rely on historical math, right? Supply and demand.
Yeah, they can't calculate human emotion.
Exactly. Or the nuance of a diplomatic whisper in Tehran. The algorithms are flying blind because the environment is totally binary, deal or no deal.
Wow. So if you're looking at your portfolio right now, trying to apply traditional logic to this?
Yeah.
Wait, how are you supposed to manage that?
You can't. I mean, the framework in the report suggests the only logical move is to drastically reduce your position size and just wait.
So applying normal trend tools right now is like, I don't know, using a thermometer to measure wind speed.
That is a perfect analogy, yeah.
But here's the paradox. If energy markets are paralyzed by this binary deal or no deal waiting game, you'd expect global equities to be just as frozen.
You would, yeah.
But they aren't. The S&P 500 just hit a new high at 7,580. And Germany's DAX index is sitting at 25,104.
Yeah, the report actually calls the DAX the strongest trend in the equities universe right now.
Because a ceasefire means direct energy cost relief for German manufacturing.
Right. Stocks are basically pricing in the absolute best-case scenario of that negotiation.
Wait, if German manufacturing is getting massive relief from the potential of lower energy costs, shouldn't we trust this stock rally? Like, why assume the S&P and the DAX have it wrong?
Because if oil is swinging on every rumor, the fear has to be somewhere.
So where's the fear hiding?
It's hiding in the copper versus gold ratio. The report flags that this ratio is actually dropping toward a -2 sigma alert.
Okay, hold on. Let's clarify that for a second. What makes a -2 sigma alert so critical?
Well, a -2 sigma event means the ratio is deviating so far from its historical average that it's statistically rare. It is a massive, flashing red light that something is deeply wrong.
Got it. Because copper is an industrial metal. It needs a growing economy.
Right, while gold is your classic safe haven. So a sinking copper to gold ratio shows that beneath the surface, the market is quietly pricing in a severe global growth slowdown.
A slowdown if this ceasefire fails and oil spikes above $95.
Precisely. So the equities are up there celebrating, but the metals are flashing this really rare statistical warning of a recession.
Wow.
Yeah. This is why the core rule of the report is so vital, which is know the regime before you pick the tool.
You cannot use a trend-following strategy in a market paralyzed by a binary geopolitical event.
Exact.
Know the regime before you pick the tool. It really leaves you with something to ponder today. If trillions of dollars in our global markets, which is, this massive supposed engine of pure mathematics, if it's currently just a reflection of collective human anxiety over a single diplomatic negotiation, what does that really say about the illusion of rational financial fundamentals?